Palantir just reported the stock is up 3%. It was up almost 5% just a minute ago. Expectations were for 8 cents per share. And guess what? They reported 8 cents per share. Expectations were $617 million in revenue. They reported $634 million in revenue. The stock is still up 3%. This company has been on quite the ride for the last year. Guys, year to date up 52%. 1 year up 225%. I have exorcised the demons. Guys, this is a company that I think is trying to emulate the NVIDIA path more than any other company. This company hit a low of like $5.80 just a year and a half ago. It's now at $26 after hours. This thing has surged. It's only been surpassed, I think, by Carvana in terms of massive growth. I'm probably lying about that. I probably don't know. But guys, there are major pros to Palantir and there are major cons to Palantir. As you guys know, 3 years ago, when that schmuck from Russia was sitting there and saying Palantir was going to the moon, I sat there and said, how? Went from $45 down to $5. Again, I'm not criticizing the way the stock went. I'm criticizing the process. And I love what Palantir does, and here's why. This is what I love the most. Gross margin right here, 81%. This is huge for a software business. Absolutely huge. These guys are doing a great job of growing their clients. They're sitting there saying, we're going to grow our clients. We're going to make more commercial clients than government clients. And we're okay having less revenue per client because our job is to get out there. Now, the comment I always get from people is, what does Palantir do? And it is very generic. They use data to solve problems. So you're a company, you're a government, you have a problem. Palantir comes in there and says, listen, we're going to take this data here and we're going to figure out a solution using that data. They are trying to do more in the AI space like everybody else in the world, including Kleenex, I'm sure. Kleenex is trying to figure out a way, I'm sure, to use AI to make wiping your nose much better. How? I have no idea. That was sarcasm. Guys, it is currently 4:06 p.m. Eastern Time. I'm recording this video. They just reported 3 or 4 minutes ago. This channel, Everything Money 24/7, is dedicated to quick reactions, getting out there 4 or 5 per week. So I need you to do me a favor. If you like this kind of news reaction, subscribe to the channel. That's all I'm asking you to do. Subscribe to that channel. And the reason being is, not only do I teach about fundamentals, the more important part I teach about is the emotional aspect of investing. Because if you were one of those people who got duped by the great Russian right here, Tom the Great, and it went all the way down to 5, and you only looked at where the stock price goes without the fundamentals, you would have been a little worried. Now you look at this and go, and I sat there and said before, listen, this is a great company for a couple of reasons. One of which, their market cap is $59 billion. Guys, look at this enterprise value, 56. When the market cap is greater than the enterprise value, that means there's more cash on hand than debt. You are basically able to buy the company for $56 million if you assume all the cash and the debt in the bank accounts. That's incredible. This company is generating cash. People aren't focused enough on the cash flow. Look at this cash flow. Last year, $700 million in free cash flow. Their net income was a negative $210 million. In the last 5 years, their average free cash flow was 145 against their average net income of negative 486. So this company, for me, I'm going to focus on that free cash flow, saying this business is getting better. So let's see how it's doing from quarter to quarter. Let's look at quarterly results. So, previous quarter, ending December, they did $608 million versus $634 this quarter, which is growth of about 3%. Not a ton, but compare it year over year. First quarter of 2023, they did $525. So 634 divided by 525 is $110 million on 525, which is roughly 25%. Actually, way more than that. Is it? No, sorry, way less than that, 20%. Guys, that's big money. That's big, big money. Guys, so here's some interesting things. In the time that I've been talking here, has anybody noticed something? Oh, how the markets are fickle. The company is now down 6%, just in the time I've been talking here. So in a matter of 3 minutes, it went from plus 4.75% to down 5.6%. That's a swing of 10.3%. And on $60 billion market cap, that's a swing of almost $6 billion in a matter of minutes. If anyone in this world tries to tell me markets are efficient, I have one thing to say to you. Fuck you. You have no idea what you're talking about. Go burn your money. Markets are not efficient, but that's good for the intelligent, emotionally controlled investor. If you're able to control your emotions when these things are happening, you should want stocks to go lower. I just said something upstairs. We're talking about starting a real estate channel. I said the first video I want to do is the real estate investor wants higher interest rates. The true stock investor should want recessions, bear markets, and high interest rates. If you're truly an investor and you understand the fundamentals of the business, the only thing you have to do left is say, how do I control my emotions? When everybody else is flipping out in a matter of minutes, they obviously said something. They're guiding some way. Something was said that drove this price down. Let me see if I can find what that is. Here's the interesting part, guys. As I was searching for this, they just said that next quarter will be 649 million to 655 million, above the previous expectations. So that's not it, but it just goes to show you how crazy. Now it's down over 6%, 6.2%. So let me go search some more. So guys, I'm still not seeing much out there. I'm sure it's going to come out as it gets talked about on Twitter more. So let's go over some of their amazing, because I'm sure they have amazing results here. Let's look at this. GAAP net income of 106 million, representing a 17% margin, sixth consecutive quarter of GAAP profitability. Income from operations, 81 million, 13, fifth consecutive quarter. GAAP earnings per share of 4% adjusted, 4 cents adjusted of 8 cents. Revenue grew 21% year over year and 4% quarter over quarter. I'd said 3 and a little over 20. U.S. commercial revenue grew 40% year over year and 14% quarter over quarter. I love that. So they're not just focusing on governments. They're sitting there saying, let's get out there and get some more commercial business going. Customer count for U.S. commercial, 69% growth year over year, 19% quarter over quarter to 262 customers. U.S. commercial remaining deal value grew 74% year over year. This is incredible, guys. Commercial revenue grew 27% year over year. Everything, government revenue grew 16%. Customer count grew 42%. 6 consecutive quarter of expanding, adjusting. My God, this company kills it. Now, one of the issues I have is their CEO. Not going to lie, that guy creeps me out. Alex Karp and his hatred of short sellers, this visceral hatred about cocaine and all this stuff. It's like, okay, guys, to me, let the short sellers do what they're going to do. Operate your business well. You operate your business well, the short sellers are going to get wiped out. Focus on operating your business. Another reason I don't like the company. A couple years ago, they beat by a penny. Now they just matched. And there's some weird balance sheet items that we noticed that were just a little irregular that we talked about. Nothing insane, but just enough. And when you see an executive team that's compensated based on hitting those numbers, there's some questionable things there. I'm not saying it's not fraud, anything like that, in my opinion. But is it questionable things to boost things by a penny here or there? Maybe so. But this revenue growth, everything is just incredible. Cash equivalents, $3.9 billion. Look at this. Guys, adjusted EBITDA, 37% margin. So we expect adjusted income from operations of 209 to 213 versus, so maybe this is part of the fall. Adjusted income from operations between 209 and 213. Right up here, they did 226. So it's actually lower. For the full year, 2024, they're raising the revenue guidance to between 2.677 to 2.689. That's raising our U.S. customer guidance, raising our adjusted income guidance. Continue to expect free cash flow between 800 and $1 billion, and we continue to expect. So the other issue is, guys, valuation. At the end of the day, that's what this is all about. How's the stock doing now? It's at down 5.7%. I mean, great balance sheet, 8 pillars. I'm even looking at the 8 pillars here, guys. Yeah, 4 check marks. This is useless. This is hard because it's a fast-growing company. This caused a little problem for me. They've diluted the crap out of their investors. This is tripling your share count. 200% is not twice as much, it's triple. 100% is twice as much, 200% is triple. That's diluting people. That bothers me. But I think that's slowed down. Let's go check it out quarter to quarter. On our income statement in our software, you go all the way to the bottom. Yeah, it's still a little bit. 211, 2.1, 213, 216, 219. If you include average diluted, 222, 228, 233, 2. So they're still diluting a little bit, to which I have to ask people, Alex, why are you diluting people when you have so much cash? Why? Yeah, I know you're probably growing the business, like putting more stock options out there. I get that. And that's fine. You want to compensate people, but also tie the compensation to something that matters long-term. Don't worry yourself about what's going on out there. That's very hard to do. My new favorite quote, Peter Lynch says, everyone has the brain power to be a good investor, but not everyone has the stomach to be a good investor. I used to believe it was 90% brain power, 10% emotion. It is flipped. It's 10% brain power, 90% emotion. But that brain power, if you don't buy based on the right fundamentals, if you don't buy based on the right process, it's still going to be difficult. But if you buy in everything perfectly, but you sell when things get rough, you're not going to do well. That's an absolute fact. The best investors are the ones who can stay calm when the markets are irrational. And guess what, guys? The markets are always going to be irrational. Look at this company. It has changed 10%, now almost 11% difference in a matter of 15 or 20 minutes. That's what makes investing difficult. If you're out there and you own even if you don't own Palantir, you've owned a company like Palantir where you've seen fluctuations after market during the day over long periods of time. But what matters most is being calm, having a good process. Once you learn the process, stick to those fundamentals, get rid of the noise, because 90% of what's out there is probably noise and junk. And that takes a long time sometimes to understand. So what's a way to skip that? Our community. Our community is geared. The software is geared towards making the right fundamental decisions, and the community is geared towards having like-minded investors sitting together, making better decisions, and handling their emotions better. So if you're interested, like everybody should be, in handling your emotions better and probably making better investing decisions because of it, join the community. Click the link below. We have limited spots for the day. Limited spots. So go sign up. And if you get on the wait list, there is a way to fast track yourself higher on the wait list. So make sure you watch for that email. But guys, it's super valuable. It's $7 for 7 days. Click that link, go sign up. Because at the end of the day, guys, what we're trying to do here is take a process, and whatever process that is, apply it to so many different companies. It's not just about finding the companies that somebody on the internet talks about. It's about finding the companies that work for you. That's what's most important. I have learned a ton just by being part of this community in terms of seeing people's reactions to things, my reactions to things. This is what it's all about. Skip steps by learning from us on this one. That's what's most important. And I look at Palantir, and I think Palantir is one of those companies that drives me the most nuts, because I look at it saying, I want Palantir because I just love the fact that they have such a great margin. They're growing fast, have a lot of potential, but they're selling for 27 times price of sales. You should pay a premium for a fast growing company. But something like Microsoft is 10 to 12 times or whatever it's at. You might sit there and say, well, Palantir should be double Microsoft. That's assuming Microsoft's fairly valued. We can't just compare things and say, oh, because this one, Palantir has a much faster growth potential than Microsoft. But if Microsoft's overvalued at 10 or 12 times revenue, is Palantir reasonable at 27? Is it overvalued? That's why we have the stock analyzer tool. So let's go pull it up. Let's pull up Palantir and see what Palantir. So guys, for revenue growth, it's now down 6.4%. I did 8, 16, and 24% revenue growth for the low, middle, and high over the next 10 years. Profit margin, 15, 25, and 35. Guys, not going to lie, it could be a lot higher than this. Look at Microsoft. Microsoft has a 68% gross margin and a bottom line margin of around 32% or something like that. So this could be low. Now, free cash flow, as you can tell, it's always higher than profit margin. So I did 20, 30, and 40. Also, could be low. That's the hard part about valuing companies that are still growing. You're not seeing the true value out of them. Now, what PE do you assign to Palantir 10 years from now? It's going to be a much more mature business. So assigning the same multiple today as you do 10 years from now, I think it's unfair. So I put in 15, 20, and 25 for both PE and price of free cash flow. And guys, my desired return here, as you can tell, my desired return, I put in 9% all across the board. Now remember, that's the market return. This is no margin of safety. And we need margin of safety because valuations and imprecise art. The future, we don't know the future. It's unpredictable. and we're all humans. We make mistakes. So make sure you put in the appropriate margin of safety for yourself. I hit the analyze button. And guys, it's now down 8%, by the way. And I have a value low side of 3, high side of 36, middle of 11 to 14. I have my watch list at 10. Guys, don't forget to subscribe and click the link below to join that community. It will help make you a lot more money. Take care.